There's no denying that India is one of the fastest growing economies in the world. In fact, it could soon become the world's third largest economy, surpassing Japan, Germany, and the United Kingdom. But India's GDP growth rate has been declining over the past few years, from 7% a decade ago to -6.6% in 2020, according to a statistics report from Macro Trend. Here is a picture showing the GDP growth rate. India is still one of the fastest growing economies in the world and is expected to remain so until at least 2040. However, there are some worrying signs for India's economy right now. The country has also been battling rising oil prices, along with most developed and emerging global markets. In this video, we look at why India's economic growth will slow down next year and what steps policymakers can take to arrest this trend. Please watch, like, and share this video. Also, drop your comments and thoughts below, and remember to subscribe to the channel for more related content similar to this. Even with India seeing a decline in its GDP growth rate up till 2020, 2021 came out to be a different year for them. They saw an 8.95% GDP growth rate, a 15.54% increase from 2020. However, according to a September news report by the Economic Times, Moody's Investor Service has predicted that India's GDP growth rate would slow from 8.3% in 2021 to 7.7% in 2022. They also stated that the GDP will further decline to 5.2% in 2023. The report further revealed that Moody's has claimed that if the private sector capex cycle were to gain steam, India's economic growth would be stronger than its projections in 2023. When asked how India can accelerate its economic growth, most analysts and experts suggest something like this: reduce red tape, cut taxes, build new infrastructure, and so on. The underlying assumption is that faster growth is the natural consequence of more market-friendly policies and better laws. This view suggests that the only thing holding India back from hitting a higher growth trajectory is the implementation of pro-market policies. In other words, if India implements suitable measures fast enough, it can continue growing at a rapid pace for years to come. But this thinking misses some important points about why India's recent growth has been so strong and why it will slow down in the coming years. We know that saving rates have dipped quite a bit during this period of accelerated growth, which means future investment potential is lower than past potential, which in turn means slower growth ahead. Let's look at why. There are a number of reasons why India's economic growth will slow down next year. Firstly, the country is facing some economic challenges, such as high inflation, a weak currency, and a slowing manufacturing sector. According to a post by Rate Inflation, Indian inflation rates have increased further from 6% in January 2022 to 7.4% in September 2022, and there seems to be no slowdown happening anytime soon. Here is a picture showing India's inflation rate from 2018 to 2022. Secondly, the new government, which came to power in July 2022, has not yet implemented many of the reforms it promised. However, it's too early to start judging now, but the economic problems happening are becoming worrying to many citizens. According to an October post by The Hindu, Anshul Avijit, a Congress spokesperson who addressed a press conference at the AICC headquarters in New Delhi, stated that the BJP government and its spin doctors continue to use high-frequency statistics to mask the true status of the economy, but no one is deceived. He further said that inflation has remained since the beginning of the year, and the unemployment rate keeps declining daily. Finally, the global economic environment is not very favorable for India at the moment. For these reasons, it is likely that India's economic growth will slow down next year. According to a November post by the Economic Times, UBS has also warned that India's growth pace may slow next fiscal year as global headwinds will seep through the cracks in its shield. The investment bank said that while the Indian economy has been relatively resilient to global economic headwinds so far, it is likely to feel the impact in the form of slower growth next year. According to their base case, they expect India's real GDP growth to slow from 6.9% in 2023 to 5.5% in 2024 before settling at the long-run average of 6% in 2025. They also expect India's export growth to come under pressure as global growth slows. The investment bank advised that the best way for India to protect itself against these risks is to make managing macro stability risks in the near term the key priority. What do you think about UBS's advice to India? Do you think the Indian economy can see a massive decline in the next fiscal years? Kindly let us know your thoughts in the comment section. Feel free to share this video with your family and friends, and don't forget to hit the like button and subscribe to our channel for more updates like this. Thanks for watching.